Hello and welcome to Your Property Podcast. My name is Michelle Kearns and today we've got with us Jay Chauhan. Hi Jay, how's it going?
Hi. Yeah, very well, Michelle. How are you?
Yeah, very good. Thank you. It's good to have you on with us today. Let's just do a quick, a quick bio. Let us know who you are and what you do in property.
Yeah, sure. So my name's Jay, based in Reading, so just outside of London. I've been in property for coming up to, I think, about nearly 10 years now. Variety of strategies that we've tried, tested, failed at, come sort of round full circle. But our main core businesses at the moment are developments. So we do mainly commercial to resi developments in and around the sort of home counties. And then the social housing aspect of what we call back-to-back leasing that we've done for our sort of cash flow strategy as well.
Okay, great. And tell me about how you got into property. Have you always been in it or have you jumped ship from another industry?
Yeah, so I actually first got involved with property while I was still working corporate. So I used to work in the city, started buying houses in South Wales, of all places, just because felt the barriers to entry are a lot lower than where we're based, and thought we were going to cut our teeth into something, and for it to not go according to plan, that would sort of be okay-ish to sort of lose investment at that sort of level. So did a fair few buy to sell properties. So we did flip projects essentially in South Wales, and then quickly realised that there wasn't much, if any, capital appreciation over sort of keeping properties for a couple of years. So that's when we brought it back to the area that we know best, which is in and around Reading, Berkshire, the county, and then built a portfolio of buy-to-lets, HMOs, and really, sort of progressed in terms of size of project, really. I didn't start doing developments until sort of cut my teeth into larger HMO sort of developments and then larger flip projects, and then started doing small blocks and then slightly larger blocks of commercial conversions.
Okay. So just going back to you said you started in South Wales, easier to access that market in terms of purchase prices, but you were doing flips. So was the market at the time helping you? Was it a rising market, or was it you were just focusing on a particular type of? Was it just basically like a redecoration, or were you adding any value to the property other than the refurbishment?
Yeah, so I'd say it was it's what I'd class as more refurbishment rather than full on development. So what we were doing, these were quite poor standard properties. They needed a full refurb, and what I mean by that is fully rewired, plumbing, kitchens, that sort. But it was more what I'd class as refurbishment. But there was enough value added from that to create that sort of equity slice when we came to sell it on the back end. And I think one thing to note is it was a good 3 hours from where I'm based, and whilst probably not looking back on it, not the easiest thing to sort of manage as your first starting point, but we did have a very, very good build team there that we knew beforehand, and I think that was quite important in our setup and being able to do multiple projects at any given one time.
Yeah, it's certainly a feather in the cap having the build team on side. I think that's one thing most people struggle with is that how do they find good builders? So if you already had that already, I guess that gave you some confidence in moving forward and getting quotes and getting the deal over the line. So
yeah, absolutely. Yeah.
Okay, so you decided then afterwards that South Wales wasn't for you, but how did you transition then to being back in Reading and looking at deals in your area if they were, before, I guess, out of your reach? Was it the fact that you've saved up some money from those Welsh properties to reinvest in your area?
Yeah, so it was a combination of using that sort of property profit, if you like, from the flips to then plough into local stock in Reading. The good thing with being local is we had a good idea on the area numbers, which always helped. And we just actually presented, working with a few agents at the time who presented just some really sound opportunities for us that we just thought, it's a no-brainer to get involved with these. And like I said, started smaller with, typical buy-to-lets, and then then transitioned to doing the sort of larger stuff like the HMOs, and some of them sort of 6-7 beds that needed sort of, again, still a refurbishment, but more of a development angle with doing dormers and single story re-extensions and stuff to really add value by creating additional sort of bedrooms as well.
And did you have like a map, like a road map in mind of where you wanted to go, or because it sounds like you've worked your way through quite methodically in terms of the types of projects, but was that always in mind that you would work your way up to build bigger projects?
Honestly, no. It's just on reflection, when someone, when I sort of spell out where we started and where we got to, it does look like it's just stair-stepped in a methodical way, as you put it, but hands up kind of thing. It was never part of the plan that, we should do it step by step. It's just the sort of way it panned out. But, I'm sort of glad it did, because it gave us the experience with certain projects at the right time. And that's quite important as well when you're bringing in, new sort of lenders, investor partners, that they want to see that track record. And it's good to see it built up over time and seeing the progression from starting with a 3-bed semi in South Wales to, 14 units in Surrey. So it's, big jump.
That's true. They do like to see that progression. If you don't have the, another team in place who does have that experience. So I'm sure that benefited you as well. And in terms of strategies and cash flow, was it always cash flow? Because obviously once you start doing bigger development projects, the cash flow is, I want to say put on hold, but it kind of eats into your current cash flow for a while until you end up refinancing on the other end. So was that useful to already have an existing portfolio and some cash flow coming in before doing the bigger projects?
Yeah, absolutely. So it's a very good point, because what we learned firsthand experience, which is not always nice, is that development is kind of feast and famine. So when you get into that longer term play of development, yes, you can realize a large back end profit, but like you mentioned, that could be when a development cycle can be up to sort of 2 years, for sort of the larger projects. So you do need that cash flow to, like you said, supplement that, because it can quickly, if you don't do your numbers, it could quickly evaporate and cause all sorts of issues. So it was something that we were aware of, after being sort of educated and coached from certain people to, say that, that base level of cash flow needs to be there when you're exploring those profit plays, if you like, to through development.
Yeah. And what do you, like, looking back now, based on what you know, what would you have done differently?
I probably would have had a more solid base when it comes to cash flow. So we had a good cash flow sort of generating from our portfolio, but I think when we started then bringing in leverage, so what I mean by that is team members, etc., obviously that increases your expenses. And I think sometimes it's just having a look at that forecasting to see that, does that warrant the current income level, or do we need to, look at maybe increasing that to then, focus on coming away to do the developments.
Yeah, I think you're right there. That forecasting element is really important, because there's a tendency to think, okay, well, we know that there's going to be, the cash flow coming in X amount of months, but there's easy things to miss, isn't there, along the way, that need some cash flow plugging in. So yeah, okay. And have you worked on your portfolio, built it through your own funds and just reinvesting each time, or have you worked with private investors as well?
Yes, it's been a combination of both. So when we first started out, we had some profit from the flips that we were doing, so that was put into starting a sort of local portfolio, if you like. But as I'm sure some of your viewers would be aware, that your own funds quickly run out, and that's where we then bring in private partners, commercial banks, some of the high street, as well as the challenger banks, if you like. So a combination of that and private investors is how we've typically funded sort of the development deals.
Have you moved into working more with the private investors now, or is it just still kind of whoever can give you the best rate?
Yeah, so I'd say we still do work predominantly with the banks. We'll be keen to move more forward with sort of the private lenders. twofold really. We generally enjoy like the personal touch. So if you get the right investor on board, it's always good to share the ups and downs with a person rather than a sort of computer, so to speak, in terms of how banks operate. But that's not to say that, we would disregard banks completely. I think, putting the two together is an ideal combination when looking at, the right projects.
Yeah, especially at the moment, the bridging rates are comparable to what you would pay a private lender anyway. So sometimes, it depends on the project and what sort of funding suits what project, right?
Yeah, absolutely.
Yeah. Okay. And so obviously building up now, you're into HMOs and bigger developments. And have you stayed at the HMO strategy, or you've gone into different ones?
So for cash flow, our main strategy is what we call back-to-back leasing. So it's looking at social housing leases that we have been doing since COVID, which we sort of fell on accidentally. So that's sort of our cash flow strategy, if you like. And then developments is what we do for longer term profit plays if we sell it, as well as, creating assets for our own portfolio if we decide to keep it.
Okay. Do you want to just go into the back-to-back leasing then and how that works?
Yeah, sure. So during COVID, we just finished the development of 14 flats in Surrey, and we had a housing association that agreed to actually buy the full block at asking price, which was obviously a great win for us because ultimately meant that we didn't have to find 14 separate buyers and creating leases and dealing with potentially 14 sets of solicitors and all the challenges that no doubt would come with that. So we're very happy with that result. But unfortunately, as soon as COVID appeared across the face of Earth, the Housing Association pulled out. At the time, didn't know obviously how long COVID was going to last. I thought it would be a couple of days or maybe a week. So I just started doing some research to try and find a replacement in case these guys didn't come back. And that was when I actually found a few sort of larger providers that were looking for housing and were desperate. The numbers were ridiculously, just staggering how many houses they needed and sort of needed them yesterday. So what we did was we ran a marketing campaign with some of our close network, if you like, with local landlords in our area. And what we quickly found was that they were struggling because a lot of them had student stock. So we have, good relationships with portfolio landlords who had student stock, but a lot of students had obviously gone home because of COVID. So they were stuck with empty properties, still trying to, service the maintenance bills, mortgages, etc. And so what we decided to do was actually put together some leases for our clients let's see how this works and if it's going to work to essentially create a win-win situation for our landlords, clients, as well as the providers and operators that we were working with. And that's essentially how we kind of fell into doing these leases, because we started off doing, I think our first client was a portfolio landlord who had 5 empty properties. So we put 5 leases on, and it sort of snowballed from there, really.
So when you say clients, you're referring to the landlord of a property that you don't own. You're just matchmaking them with the company that's providing the social housing, right?
Yeah, exactly. So it might be a housing association that will be the tenant, if you like, and then client in this example would be our landlords and now developers that we work with, some developers with blocks of flats to put leases on as well.
And have you got more involved in the process in terms of looking to purchase some of these properties, like on a purchase lease option, or is it just straightforward? I suppose it's similar to a rent-to-rent strategy where you're guaranteeing the rent. Is that right, to the landlord?
Yeah, correct. Yeah. So it is exactly that. And the way, we sort of, I've actually got experience firsthand with sort of traditional rent-to-rent, if you like. But we found that there's some real positive differences by doing this strategy that allowed us to actually scale. And what I've noticed when we were maybe doing rent-to-rent and didn't really have a plan to scale it to huge numbers, but it still felt that there's a lot of day-to-day involvement really in business that don't really allow you to scale, where if you set this up right, which has taken us time, I'm not saying it is completely right now. We've got staff, we've got processes, systems that we're trying to put in place. We've just done 3 months of, sort of under the bonnet type work, trying to really work on the business to get it to where it is. But we do know it's a strategy that can allow you to scale very quickly in comparison to, say, normal traditional rent to rent.
Yes, because ultimately the charity or the provider for the housing association, I always get them confused, but they are taking care of all of what typically you as a rent-to-rent provider would take care of, right? So all the bills and all the maintenance, etc. So the provider takes care of that, and you just take a fee, like a commission between, like acting as an agent. Is that how this works?
Yeah, so the best way we put it is we take a management fee. So it would be, sort of the difference between what might be agreed with said landlord and what housing associations willing or able to pay the rent and lease the property long term. So yeah, that's sort of the difference in the middle is what we take as a ongoing fee.
And do you find that the landlords ask you, what's your role in overseeing this? Because I guess how much do they dig into it? Sometimes they don't really care, and they're just saying, as long as I get my money, it's fine. You're guaranteeing it.
No, it's a really good question, and what we are very open about and happy as well to explore with prospective clients is to say whether straight away whether we think we're the right fit for them. It's not going to work for every landlord. Mm-hmm. Typically, what I'd say, having done a fair few of these now, is that it best works for those landlords who really value their time over anything else, and sort of understand that yes, it's an investment, but at the same time, it's maybe not something where they want to be involved with it every day and picking up maintenance issues, management issues, and all sorts that can come with tenants, especially with HMOs. Obviously, we own HMOs ourselves, so first-hand experience, understand the pains that landlords can have, and I think it comes across well when we're sort of putting that across that we are landlords ourselves and understand their pains and frustrations.
Yeah, because I guess even on the typical rent-to-rent arrangement, that any kind of maintenance needs doing, you still really have to contact the landlord, and probably they're going to pay for anything that's chunky in terms of costs. Whereas under this scenario, the provider kind of takes care of all of that. And does there need to be certain requirements from the landlord, or let's say that the property has to be unencumbered, or just that do you have to change mortgages to have this strategy in place?
Yeah, so again, a good point on lending and what's allowed. Ultimately, the lender needs to be comfortable with who the tenant profile is, and that's what we typically tell our landlords, to ensure that you have that conversation with your lenders to make sure they're happy with it. And then in terms with how it's set up, yes, unencumbered. Obviously, we need vacant possession, and then the main thing is obviously compliance, which for me is a really a positive element, because I think the private rented sector at the moment is, to a degree, is not as regulated as it should be in terms of when it comes to compliance, especially with HMOs. And I think where you have set standards that you need to have in place before a housing association operator occupies, I think that can only be a positive for everyone around.
And do you do any refurbishments to get it up to standard if it's not, or do you ask the landlord to fund those? We've
negotiated into both scenarios. To be honest, we take a view on things. If we're ultimately working with landlords to ensure their properties are compliant, which is first and foremost vital for us, and then we take a view on where there's a need for refurbishment. At the end of the day, it's benefiting the landlords, putting value on their property, and if it's needed, it's needed. So we have done it both ways, where landlords have seen the value to contribute, but at the same time, where landlords maybe not been so keen, but we've seen it as valuable for us, we will take that on ourselves.
And do you work now just with one housing association, or you've got lots of different companies you work with, or different charities?
Yeah, so we started working with literally just a couple during COVID, because it was at a point where, whilst property kind of was an active space, that's why we were able to carry on our operations. There wasn't much in terms of activity compared to what there is now. So we've definitely got, a lot more scope and exposure to a variety of housing associations and operators. And we're always looking to expand that, because it depends on areas that we operate, the type of properties, and we're working towards trying to find a happy medium to understand, right, this property worked perfectly with this provider, and, working with them to help them procure what they need in terms of houses or units.
Yeah. And I guess some people might be thinking, well, I guess why would they come through you rather than going straight to the housing association? But, why would anyone do the work themselves anyway? If you're going to, if you're going to arrange everything and put it all in place and essentially guarantee it, then is that what they value in the relationship with you?
Yeah, I think it comes back to what I mentioned about what we believe. We sort of built who our ideal avatar is to work with in terms of a landlord. And I think coming back to the point I mentioned about, it's those guys who value their time. They might have they might have been in the property sort of industry for 20, 30 years. And, there's other things going on in their life that they value more. And it is that balancing act of understanding that, yes, I could probably generate a little bit more if I was going direct, but then it's also trying to find those relationships, build those relationships. Public sector is not easy to deal with. It doesn't move very quickly. It's taken time to sort of build the relationships that we have built, and it's I think it works well with, like I said, those landlords who understand that.
Yeah, and it sounds like an interesting model. And working, is it the goal now to just scale this business, and have you kind of set it up as a bespoke management service just for this sector?
Yeah, so what we've literally, like I said, the last 3 months is sort of working to see what needs tweaking, what needs improving. I felt we've done that. I still think we need a bit more to do with the business, but that will enable us to scale it. We've got sort of targets in mind. We always said that this is sort of a cash flow element, and development is ultimately, this allows us to do the development. So we want to ensure that, coming back to, I think you agreed with the forecasting, that's very vital and imperative for us that we get that right. But I think when we've got the numbers right, which we're pretty much there, that's what we'll focus on with the team that we've got in place. There's always a sweet spot and a sort of commercial balance as to where we can get to without going too far and then it sort of causing issues. So I think we'll be still focusing on that over the next year, and see where we get to, as well as then sort of doing the developments that we do as well.
Yeah. So are you running the developments alongside, or is it kind of like saving up and up to kind of do the next one and then?
Yeah. So at the moment we've got a couple of projects that are in planning stage. We haven't got round to ultimately the funding stage and sort of the project life cycle, if you like, to getting on the site. But it's something that, again, we do a lot of direct to vendor campaigning for our development. So I think that's, on reflection, yes, you can get some, cracking deals that way, and you're dealing personally directly with the owners, but it's more of a longer play. So I think one thing that we're going to build in is working a lot more with agents as we move forward as well, just to help propel that pipeline.
Well, you've got a great track record, so it's, at least you can go to them and say, like, here's what we've done, we're ready. Gives more certainty to the agent, doesn't it?
Yeah, exactly. That's what it's all about, relationships in the day, and building those relationships. So we have sort of done that, fallen away from doing it. I think we need to come back to, like I said, picking up where we left off, and, like you said, building those relationships with local agents. How
are you finding stacking the development deals at the moment? Obviously, the market, we're recording this April 24, and the market kind of seems to be just fairly stable. Nothing too crazy is going on right now. So in terms of stacking the deals, development deals, where you're looking to complete an exit in anything from 9 to 18 months, how do you kind of manage that uncertainty of what might happen in the market in that time?
Yeah, no, it's a great question, and I've been asked this a few times recently, and I always seem to come back to a similar sort of answer, and it's naturally it's all in the numbers. But what I mean by that is essentially you realise your profit when you buy, not when you sell. So I think as long as you're always buying the right price, yes, that's something that's in our control, that we can dictate what we're paying for a site. One thing we can't dictate is, obviously what's going on externally with rates, bill costs, labour costs, whatever, might be fluctuating. So I think that's the premise that we always focus on, is trying to ensure that we're buying at, the most, sort of active amount that we can to ensure that the development can withstand 9-18 months of build out, if that's the case, as well as market conditions changing.
Are you looking for a specific type of property or strategy within that development space?
Yeah, so we look at twofold. So we're looking mainly, when we do the commercial resi, it's obviously naturally looking at sort of Class E buildings, which allow us to utilise permitted development rights, which is what we've been doing pretty much on most developments, rather than going through full planning. It's because we've had fair enough of pain going through full planning, where again, that's something that you can control to a degree, but ultimately, it's in the planner's hands in terms of timeframes, etc., how long it takes. Permitted development allows us to work to set guidelines, and I think that's what we're still keen to do. Just to come back to your point about how do you mitigate what might happen in the next 18 months, I think at least if you can build in a concrete planning timeline, that can help with projects. So that's probably the main aspect that we look at, as well as where we can add value from, planning uplift, as we call it, for sites that are there. Also, quite keen on mixed use buildings. So mixed use, whether they are tenanted or not, just because we, again, with the providers that we work with, what we like to do is then look at putting long leases on them on the back end, just to give us that security and consistent, secure, sustainable returns each month, which we like.
Yeah, great. And okay, and then is it just kind of more of the same going forward, or you got any plans to go into a different space?
No, I've had that problem all my life, really. That sort of shiny penny syndrome. Where I was like, all right, that looks, it looks worth having a look at. It's just how my brain works at high frequency. But I think we've, obviously we've done pretty well with the leasing today. I think now we've got quite a solid team and plans to move forward for next year. That would definitely be a high priority, as well as really trying to gear up the amount of volume that we can do with the development sites, and that starts from literally the amount of letters that go out and just making sure it's consistent. Really, it's just consistency, I think, is going to be key for us over the next year or so to keep that going.
Batten down the hatches, and just I think there is an element of that, isn't there? Because sometimes people say, "Oh, how many more properties are you going to do? When's enough?" And it's like, well, you get to a stage where you actually just want to kind of bank what you've got and then fix all of the admin stuff, and then once you kind of level out, then you can go again. But you don't want to be running a million miles an hour just without stopping. It's you've got to take a break and, I guess, reinvest in the systems and the business, as well as into the property. Yeah. So. Yeah,
absolutely. That's the plan, anyway. Yeah.
Cool. And so, looking back now, obviously you must meet people all the time through networking and various training events and things who are at the beginning of their journey. So, anything that we haven't covered that you think would be useful for people who are just starting out, who want to kind of follow on the similar trajectory?
Yeah, I'd say for anyone who is starting out is to really try and understand what it is you're looking to achieve. And I don't mean sort of, I've always struggled with, people say, what's your 10-year, 5-year plan? I wouldn't worry so much about that. It's, essentially have a look at what you would like to ideally achieve maybe in the next 12 months. I'd say, from experience and speaking to people that we've worked with before, it's normally something like replacing your income, which is great, and then it's sort of having a look at what that figure might be, and then working back from that as to how you can achieve that, whether that is, with a cash flow strategy that you can do. But I'd say, just try and stick with something once you decide what that strategy is. And, it's very easy to get blinded by everything that's going on online and social media and what other people are doing. But I think if you can really focus on something that you decide to stick with and really go with it, that will make a big difference in your trajectory over 12 months, 24 months, whatever that might be.
Yeah, I completely agree. working backwards. Yeah, it can be quite overwhelming, can't it? When people just,
It can, yeah.
you know, especially when they're in the property education world, it's there's a lot going on, a lot of different, as you say, shiny pennies. So understanding what's important is a good place to start. So
Yeah,
great. Okay,
absolutely.
and where can people find out more about what you're up to and follow your progress?
Yeah, so I'll send you the details so you can put it across. But yeah, the website for anyone who wants to find out further about the leasing stuff that we do is backtobackleasing.co.uk. Email address info@backtobackleasing.co.uk, and then just search for me online on Facebook, Instagram. Not very active, but the profiles are there. So yeah, feel free to connect and shoot me a message if you've got any questions.
Right. So, and just remind us, where are you based, or where would you be looking for more properties for your company?
Yeah, so in and around, we operate. We started in Berkshire in the home county, so we do all the home counties now and London. So anywhere sort of southeast. But if something comes up that anyone wants to discuss that's further afield, we do have associates that can assist in the Midlands and the North as well. So we've got some pretty good coverage actually now. So it's we can happy to pick up with anyone that might want to discuss further.
Right. Well, sounds like exciting times for you. So, all the best with the new ventures and see what happens next.
Thank you. Thank you very much, Michelle. Thank you.
Thank you, Fab, for coming on. And for anyone else who's a listener and not yet a subscriber to the YPM magazine, click the link in the show notes for your free 30-day trial. And also look out for our event on the 15th of June coming up. It is in Milton Keynes, and you can get tickets from our website. We'll speak to you soon. Thanks.